Hello and welcome to another episode of Building Success, a real estate podcast. My name is Nick, and I will once again be your guide as we talk to some of the best and brightest in the world of real estate tech, operations, and financials from across the globe. This podcast would not be possible without listeners like you, so if you like what you hear and want to hear more of it, please consider liking and subscribing to Building Success on iTunes, YouTube, wherever you listen to podcasts. All of that helps move us up in the rankings and lets us know how well we are doing. So today I am joined by Matt Ehrlich from Experian and Durkee from MRI Software. And today the topic is fraud, and specifically fraud in the real estate industry. However, we do dive into personal fraud, fraud in tech, digital advancements in protection against fraud, as well as some of the ways that maybe tech is actually contributing to the fraud issue. Really good discussion with two really bright individuals on the topic. So have a listen and let us know what you think. Without further ado, here is Durkee and Matt Ehrlich. Well, welcome, gentlemen, and thank you for joining me today. If you could, to get things started, both introduce yourselves. Let's start with you, Matt.
Hi, this is Matt Ehrlich. I am the Senior Director with Experian's Fraud and Identity Solutions. I've been with Experian 10 years now, all of that time in fraud and identity, and I work with clients, with partners like MRI, and detecting the latest fraud trends and creating solutions and launching products on how to defend against them.
And hello, my name is Durkee. I'm a director at MRI Resident Check. Resident Check is MRI's software's tenant screening SaaS solution for the multifamily industry. I'm responsible for product management, operations, and client support. And in all three of those areas, we're concerned and focused on making sure that we help clients protect against fraud.
And so fraud is definitely what we're here for today. I'm glad, nice segue there, Aaron. And before we kind of dive into the topic and really dive into the topic of fraud in real estate, I wanted to start on what is happening in general with fraud in the technology space. And technology's obviously been advanced to make things easier, but that also requires a lot of protections. And one of the reasons we wanted to do this podcast is because there's a lot of news stories about companies that are getting under pressure for not having the protections in place to help prevent fraud. So just as a general overview, and I'm looking more towards you, Matt, if you wouldn't mind kind of giving us an overview of what's happening in the market.
Sure, and I'm going to start fairly big picture, but then we'll zero in on some of what we're hearing and seeing around real estate and online leasing, and I know Aaron can comment on that as well. So some of the biggest fraud trends, currently and then over the last couple of years have been around first-party fraud and the term synthetic ID, which is usually categorized as a type of first-party fraud. Real quick, I'll use the industry terms, things like first-party fraud and third-party fraud. Try to not overuse those, but first-party fraud is true-party fraud, so that means I, Matt Ehrlich, am committing the fraud, versus a third-party fraud, which is what most everybody knows and sees in the media as identity theft. So I'm a criminal and I've stolen Aaron's identity information and perhaps his credit card information, and now I'm posing online as him to commit fraud. So those are the differences, and I think it's important because, again, the trend we're seeing broadly across multiple industries, including in real estate, is this first-party fraud, where it's the actual person, and they have an intent. They have an intent to never pay or to make their first payment default, and those, again, are some terms from the industry. But what they're doing, and their credit usually suffers for it, but they go in with an intent never to pay or not make their payments. That's what makes it a little different than your typical credit default or or bad debt. And a lot of our clients struggle to define those and categorize those correctly. Synthetic idea is even more insidious because we have fraud rings that are now creating fictitious identities, and these identities are usually either a combination of real and fake information. So the real information could be an address that the criminal controls, but the social security number is either stolen or dormant. The name, maybe the date of birth, are all created. And what the goal is they get that identity substantiated throughout the financial services system throughout our country, whether that's getting added as an authorized user to someone's credit account and ultimately a credit profile created for them, or opening credit cards and other lending instruments in their name. The goal is they have that identity look like a real customer. This all becomes important when you think about the digital experience, and as online leasing for multifamily they're growing that digital experience, driving due to customer preference more and more applicants online for that holistic experience of reviewing properties and options, all the way through the leasing experience, application experience. That the risk goes up substantially because these synthetic IDs are being used in that experience. There's less face-to-face interaction or over-the-phone interaction, and they have consumer preference on their side. So consumers want to deal through mobile or through chat or completely online, and so it gets harder to pick up those signals and tells that something suspicious is going on. So some of the things I've heard specifically in the industry is an anecdote about a particularly property manager who was offering a promotion to offer, I think it was 2 months or 3 months free with their assigned lease for an extended period. And so a synthetic ID was used, and there was a real person behind it, but it wasn't their information at all. But it was used to apply for and sign that lease. They took ownership of the property and moved out right before the promotion or free period expired, and so they hadn't made any payments because their payments were due to start approximately 90 days after they took possession, and so the property manager in this case was left without any money and no way to trace that person or collect on it. So that's some of what we're seeing, and some of those drivers that are in the industry and creating these both opportunities and challenges.
And I would reiterate that particularly in the multifamily space, we're seeing our clients either in the last couple of years, they've launched a portal, a place for applicants to come and apply online. Again, make that much easier to view the properties and apply. So there's an important piece of convenience associated with increasing occupancy. But at the same time, that is where the increase in bad debt has come over the last couple of years. Depending on the studies that you see and what we're seeing in our client base, even just a couple of years ago, 10 to 15% of applications were accepted online, and just in the last 2 years, that's grown to 20 or 30%. And it's no coincidence that those two are cause and effect. That increase in the online activity is what's really increasing the bad debt, and we got to get a better view, a peek into how much of the bad debt is coming from fraud. Matt just gave some great examples of moving in with no intent to pay. Other examples we've seen go so far as to use other technologies such as Airbnb to go ahead and never move in, but then make money off of renting that unit out for a day or a weekend, and of course increase the chances of damages that go with that.
So with technology and the portals, we've definitely seen have been a big advancement for some of these multifamily communities. Is technology in general, is it is it helping to mitigate fraud, or is it the main driver contributing to fraud?
Well, I would say it's both. It's a little bit of a cat and mouse game that we've seen played out with spammers and anti-spam services, and the same kind of game that's played with the bad actors that create viruses and malware, and all of the companies out there that want to prevent those viruses and that malware through their antivirus services. So the fraud is being proliferated by changes and advances in technology, but at the same time, we have technology solutions that can actually detect that. And that's why it can be real important to partner with an innovative tenant screening provider that is also partnered with a leader in the fraud prevention and ID theft prevention industry to stay ahead of that cat and mouse game.
And I would agree with Aaron, and I would say it's both. There's technology is definitely contributing to fraud, creating more vulnerabilities in the race for having the best, customer experience, right, for reviewing properties, applying online, shopping, all of the full service portals. What you're doing is using technology to create all those great features, but if attention's not given to ensuring that identity up front and using technology to detect signs and signals that something may be fishy, then you're exponentially increasing your risk. So, a good example, right, is that we have the ability to understand where a device like a PC, a mobile phone, or a tablet, where that's originating from, using the IP address, the language, and others. It's very customer experience friendly, so there's not really anything that the customer or consumer themselves need to do, but it can be used to understand if perhaps a online inquiry or transaction is originating, say, outside the United States, or from a very risky region of the world, which may be legitimate, but it may or may not, it may be fraud as well. And so I think those are some of the tools that as an industry need to be considered as that digital experience is built out further to use as protections.
So what is it that property management companies should be concerned with?
Well, the obvious one there, Nick, is fraud dollar losses. They're going to lose out on actual costs related to synthetic IDs, ID theft, first-party fraud. But there's some other risks and I think concerns. Things like property damage and eviction expenses, right? If they haven't done the due diligence to ensure they have the person who they say they are is up front and early on in that process. The bad debt and credit write-offs and the cost of identifying and supporting and reporting on those, certainly as a byproduct of that first-party fraud. And then, something else to think about too, maybe more long-term, is reputational risk or damage. Could there be damage to the brand in the industry if they have enough fraud, or perhaps make it into the media as a story about an experience or leasing gone wrong?
And I agree with Matt, spot on with what the risk is to the bad debt. And we referenced before, in particular, when bad debt rises, understanding what component of that is due to fraud. It's real important to understand the difference between the traditional credit risks and those that don't have the intent to be fraudulent and those that do, whether it's a first party or a third party. And also added to some of those risks, just depending on how you look at your bad debt, lost occupancy. Clearly, if you had a good tenant in there, you would have been collecting the rents during that time that the fraudulent activity is going on. And then you end up spending twice as much money on marketing dollars now that you've gone through the eviction process and you've written off that bad debt. You need to fill that with a good tenant, and you're going to spend twice as much on your marketing dollars in order to make that happen.
So you've both mentioned there's new tools that are emerging. What all is there that needs to be considered to deal with all of these growing fraud trends?
So I wanted to share a statistic as we'll talk about kind of the current tools and approaches and what's emerging and the newer tools that are available and starting to be evaluated and adopted. But Experian did a global fraud and identity report this year in February, and we surveyed over 5,000 consumers and over 500 businesses to get perspectives from both the consumer as well as businesses and organizations on the state of fraud. And one of the things that we asked them was about the authentication and security measures and how important it is to them that those have little or even no impact on consumers and their interactions with their customers. And probably not surprising, but it was 75% of those businesses surveyed want advanced authentication and security measures that have a little or no impact on their digital customer experience. And so I share that because we'll talk about what the most commonly used fraud tools and tactics are today, and then I think what you'll hear and see is that these emerging tools play exactly into that. There is a trend towards strength in these tools that help prevent fraud and do a better job of identification and risking, but don't require much, if anything, from the customer, potential customer, applicant themselves. So I think that's overall good news. So what's being done most commonly today, particularly in online leasing and multifamilies and the portal experience, is the credit report is being used. The fraud tools and information that's available on the credit report is by far the most common. So these are things like Experian is called fraud shield indicators, but it's common for all of the bureaus to have some type of alert that alerts to high-risk conditions. If we've seen a Social Security number that's been used more frequently for someone else, or if there's an address mismatch, the one that the applicant is using versus what we have as their best address on file. Those are solid, reliable, workhorse fraud tools. But what they don't provide is some of the sophistication or the holistic view that helps balance risk and trust. And so often those alerts, the challenge is finding what that next step is and how do I clear those. Maybe it means going back to the customer and asking for some additional documentary verification, which again, as we think about the importance of customer experience, the fewer interactions, the less friction, the better, right? But those are still working well. I think as Aaron and I both talked about, where technology is growing, and we're going to see further enablement of the digital experience and even more, features and activities driven online or through mobile. Some more sophisticated tools are needed. So emerging tools, things like device intelligence, which is the example I gave earlier about understanding from where the device that's accessing the website or coming through a mobile app, where that's originating from. There are a lot of other characteristics that can be used from that device that don't require anything from the customer or applicant themselves. And to be clear, these are all privacy compliant. We're not talking about doing anything shady or that the consumer themselves hasn't agreed to. Document verification is one of high interest from the industry. This offers the opportunity for the applicant to use their smartphone to take a picture of the front and the back of their driver's license or their passport, some other legal document identifying them, and then those images are used and scanned for validity and for tells around potentially being counterfeit. And I think one of the most interesting parts of that is the picture on the document, such as on your driver's license, is compared with a selfie that's taken by the applicant. And that biometric facial recognition and comparison becomes yet another tool for identifying that goes beyond sort of what we do today. So certainly you have to think about that in terms of the customer experience. Is that right for every single applicant online? Perhaps not, but where risk warrants, or to drive even more of a digital experience for say millennials and the generations that prefer that might be a great tool to have in the tool belt.
And I would reiterate three of those real important points that Matt just made that are particularly relevant to the multifamily industry. Leasing friction. We know how hard it is and how many marketing dollars are spent in order to get those applicants, those potential tenants, those prospects to that portal. And we want to make sure that there is a high conversion rate associated with that. And a lot of the technology solutions that include things such as asking for an additional password or asking for additional knowledge-based questions that, again, you come across in other industries, which are good tools, but they slow the process down. They create some friction. They increase the chances that the prospect is going to abandon. And so by bringing some of these additional technology solutions to bear, it's a real important point that Matt just mentioned. Document verification would be the second piece that Matt just mentioned, and would also extend that into both the income and the employment verification. A very important piece in the multifamily is verifying that income and verifying employment, increasing the chances of being a good tenant and paying rent on time, bringing those technology solutions to bear to authenticate those. Very easy way to doctor various different IDs. It really is just taking a bank statement or a pay stub and using Photoshop to alter the dollars associated with it, and all of a sudden the rent to income is off, and you've got the increased chance that you're going to have bad debt associated with that, and the technology can detect those types of markups, if you will. And then I'll go back to something I've mentioned associated with the bad debt. We understand that it's there. We want to keep that as minimal as possible, but we do need to, and we see the value in creating a white paper that really helps us understand how much of that bad debt is from fraud and how much it is from more in the traditional sense. So really bringing data analysis to bear on the bad debt and in understanding and being able to differentiate those different write-offs that were associated with fraud.
So with all of these trends and all the things happening right now, what is it that leasing staffs can do today to protect themselves?
Well, we can go back to the good old-fashioned, tried and true, old-school methods, if you will, of making sure that we get all of the required fields, getting the first name, getting the middle name and the full middle name, the last name, the date of birth, the social security number, the driver's license, and in particular verifying that identification. And another important piece, along with the technology that we've mentioned that will do that verification of that ID, is to partner with a tenant screening provider that has a team of professionals that can do the ID verification. Turnover in site personnel in the multifamily industry is very high. Leasing agents and property managers change frequently, and they're not exactly expected to be experts on ID verification. So having a tenant screening provider that has that ability, that subject matter expertise to offload that from the site personnel is a very important piece of what just can be done today.
And I'll add to that. What I like about what Aaron said is, that partnering with a tenant screening provider that is forward-thinking about fraud and identification. Often, the authentication of the applicant or customer is an afterthought. There's a lot of focus, as Aaron has mentioned, on the marketing, on driving prospective customers to the website or to download mobile, and so that afterthought of, well, how do I properly identify who I'm interacting with on the other side is an afterthought. So what I would recommend additionally is, some of those sort of tried and true and old school methods can be applied online, right? So ensuring you're collecting all of the information and all of the information that can be used as part of the identity assessment and fraud risking. So as much information, personal identifying information that can be collected is very helpful in that. And then generally take a risk-based approach. And so we recommend this across a number of industries, and I think it's applicable here. And essentially that means apply additional scrutiny or challenges to the identity and the online experience, or it can even be face-to-face, but do that when risk warrants. And that elevated risk can come from a gut feel that something is fishy, or often information that is incorrectly entered on the website, or social security numbers that checks that don't pan out. I think listening to those, collecting data that can be used empirically over time to know when it's associated with fraud or something suspicious, and then again elevating the level of identification and authentication required on those occurrences. And so the result is you're not making it difficult for everybody that comes through, but really just a small subset of customers or online transactions where there's risk warranted, or there's some type of tell that suggests something isn't right. And that approach optimizes the experience for the legitimate customers, but makes it harder for those customers that or criminals that are not who they say they are.
One last question for you guys. What can property managers expect when it comes to fraud and the advancements in technology?
Well, one thing they can certainly expect is increased risk and new and unique forms of fraud appearing in multifamily industry and online leasing and the online experience. We know from experience that fraud migrates and shifts to different areas. It is industrialized. There's a whole fraud economy on the dark web where information is bought and sold and traded and shared, and it's specialized. And so what we saw with the U.S. moving to different liability within credit card payments and merchants, which for consumers that meant they got new credit card issued to them that now had a chip in it. Well, that took away point-of-sale counterfeit fraud. It's greatly reduced the amount of card counterfeit fraud at the merchant's point of sale. Does that mean the criminal rings and fraudsters just gave up and hung up their fraud belts, if you will? Well, no. The resulting consequence was an increase in new account and application fraud. It caused the explosion in synthetic ID. It caused increases in fraud that we're seeing in the automotive industry, and now that we're seeing start to migrate into to online leasing. So certainly it's not going to get better or go away or decrease. It's going to increase. The sophistication of the tools will increase. But it's not all dark news. I think, as we mentioned earlier, there are some great tools available today and technologies. There's great best practices. So again, I think partnering with a forward-thinking company like MRI Software, who's has an eye towards this market and working with folks like us, Experian, to identify those trends before they come chronic and plan for those and bring those into the technology is a great positive aspect that property managers can expect.
And I would just reiterate that as you look at your plans to go online, or if you're already executing your online strategy, you're just going to have to keep an eye on, again, the bad debt and understanding how much of that bad debt is related to fraud. And so on the plus ledger, while we know, and Matt's done a good job of giving us some ideas of what could be out there right now and what could be coming, making sure that you have the right tools and the partners to help you analyze your bad debt and understand where it is that fraud is having an influence on that, because that way you can know what you need to address. And so that's a very important piece of what's coming, is just always being watchful and taking full advantage of the technology, and again, finding a good partner to do that for you. Got lots of things to keep an eye on, lots of important business key performance indicators that you want to keep your focus on, your bad debt, your occupancy rates, and by having your tenant screening provider protect you and mitigate you against fraud is a very important piece of that.
Well, thank you both so much for joining me today. I really appreciate you taking the time.
Thank you. My pleasure.
And if you'd like more information on Experian, you can check out Experian.com. And Matt mentioned at one point their 2018 Global Fraud and Identity Report. We'll provide a link to that in the show notes as well if you're interested. For everything building success, be sure to check out mrisoftware.com/building success. And until next time, we will see you later.